A little over a week ago, Indian billionaire Gautam Adani was the world's third richest man. He ended this week well outside the top 10 in what's amounted to perhaps the fastest loss of wealth in history. Adani's companies had more than 100 billion US dollars wiped from their value. His share of that, more than 50 billion US. But there are fears that the fall won't end there, triggering a contagion that could hurt the Indian and the global economy. Gautam Adani started with virtually nothing. His father was a textile merchant from Gujarat. He's one of 7 children and was a university dropout. But through the force of his personality and exquisite connections, Adani and his brother Vinod, the 6th richest person in India, became amongst the wealthiest people on the planet. But it hasn't been easy. Gautam Adani survived a kidnapping in 1998. He was released after a ransom was paid. He was at the Taj Hotel when the Mumbai terror attacks took place, but was rescued. His wealth catapulted during the government of Narendra Modi. Modi even used Adani aircraft in the past during an election campaign. But in the past 5 years, Adani's wealth has soared by more than 20 times. By early this year, he was wealthier than Bill Gates, than Warren Buffett. He even passed Amazon's Jeff Bezos. But the question that threatens Gautam Adani's future is the one posed by short-selling investor Hindenburg Research. It asked, is it all a con? Hindenburg Research famously took down US electric truck manufacturer Nikola. It accused it of faking a video showing its vehicle working when it was simply rolling down a hill. Following that report, Nikola Chief Executive Trevor Milton was found guilty of 3 fraud charges.
Today, we announced charges against Trevor Milton, former CEO and Executive Chair of Nikola Corporation.
With Adani, Hindenburg's 2-year investigation includes that the mining conglomerate engaged in stock manipulation, accounting fraud and money laundering, the biggest con in corporate history, it's said. The reaction on India's stock market was instant. In just over 6 hours of trading, the Adani group of companies lost more than $70 billion in market value. Adani, though, was quick to rebut the claims. In a 413-page response, the company said the short seller's actions were nothing short of a calculated securities fraud under applicable law. Here's Adani's CFO, Jugashinder Singh.
Our informed and knowledgeable investors are not influenced by one-sided, motivated and unsubstantiated reports with vested interests.
The timing of the attack from Hindenburg was deliberate. It targeted a new $2.5 billion US share sale. That sale was pitched with a floor price of 3,112 rupees per share. But after the Hindenburg report, the share price crashed well below that. Nobody in their right mind would buy the shares when they could buy them cheaper on the market. Adani had no choice but to pull the pin on the buyback, and that sent the shares tumbling even further to around 1,500 rupee. By late this week, Adani Enterprises had bombed out to a market cap of 21 billion US dollars. It was down 54%. Across the 9 Adani companies, including ports, green energy, power and transmission, the combined loss was 108 billion US dollars. Even worse, its corporate bonds were sold off to distress levels. The rates on those bonds soared, and there are key bonds due to be rolled over in the coming weeks. Another test for the company's resolve and solvency. As Gautam Adani pulled the share sale, he spoke for the first time.
Despite the volatility in the stock over the last week, your faith and belief in the company, its business, and its management has been extremely reassuring and humbling for all of us. We are very confident that we will continue to get support in the future also. Thank you again for your trust in us.
Now regulators and governments are having to assess the impact of a potential collapse of the Adani empire. Indian banks have exposure to around 40% of Adani's total group debt. Analysts claim this is manageable. India's Reserve Bank is doing its own investigation, asking its banks to release their exposure to the Adani companies. Citigroup's wealth unit, meanwhile, put a stop on margin loans on Adani securities. And while Gautam Adani works to stem the flow from the losses from his share prices, you need to also consider the millions, perhaps hundreds of millions of dollars that Hindenburg will have made from the release of its report just a week ago. Adani says it's exploring legal action. The question is whether it has enough time to see it through the courts.